Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock with news. Financial markets have virtually dismissed the Omicron threats now. But first, US jobless claims spiked last week, but in a seasonal pattern. And if you look past that, they remain low and lower than pre-pandemic. On that basis, actually, they're at a 50-year low. There are still less than 2 million people on these benefits, and the lower trend is still in place. Last week's levels were about what analysts were expecting, however. And the widely watched USDA WASDE report is now suggesting that the world wheat harvest will be better than previously indicated, and wheat prices slipped. But despite upward revisions to global stocks this month, they are still at a 5-year low. The same report suggests the US will be importing more beef at higher prices, and the US dairy production is slipping and prices are rising there too. The one part of consumer spending that has delivered lower prices consistently has been online shopping, which is one reason it's been booming recently. And for the first time since it's been tracked in 2014, online prices are rising fast, up 3.5% in the past year and extending the rises to 18 straight months. The supply chain pressures are building inflation everywhere now. Worse, the expected easing of container freight rates has stopped, with overall cost rising last week. Bulk cargo freight is back in a rising trend as well. And China's consumer prices rose in November by 2.3% and up from 1.5% in October, and its highest in a year. It was led by rising pork prices, although beef, lamb and milk prices remain all well contained. China's producer prices, however, remained very high in November, up 12.9% in a year, but there was actually no rise from October. Still, they're at record modern highs. And still in China, global ratings agency Fitch has declared both Evergrande and Kaiser have defaulted on their bond obligations. The US Treasury 10-year yield opens today at 1.50% and retracing 2 basis points overnight. And we should also note that equity market reactions to the series of pandemic shocks are becoming shorter and less severe. And the price of gold will start today at $1,777 an ounce and down $5 overnight. And oil prices are about $1.50 lower at just on $71 a barrel in the US, while the international Brent price is down to just on $74.50 a barrel. And the Kiwi dollar opens today weaker at 67.8 US cents. Against the Australian dollar, we're down to 94.9 Australian cents. And against the euro, we're unchanged at 60.1 euro cents. That means our trade-weighted index starts today at 72.3. We should also note that the Chinese Yuan rose to another 3-year high against the US dollar as the Chinese central bank stopped intervening in this market, for now at least. We welcome your feedback on these issues. Leave a comment below or on our website. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.